Good morning, and welcome to another edition of Saturday Morning Coffee Talk. I'm Kyle Pankey, and today we're going to dive into the Iran war and how that affects the market and the overall economy moving forward. Now, I want to be very clear and upfront that we are not going to dive into the humanitarian crisis in Iran, whether a war should or should not be happening, and we're certainly not going to try to predict the outcome of this event. But what we are going to do is understand how global events affect markets and the economy. And we're also going to reinforce the idea that markets react to uncertainty, not necessarily long-term fundamentals. And at the crux of the Iran issue is oil. When geopolitical events occur, the place the impact shows up almost every time first is energy markets. And this is because oil's in everything that we do. It's the global pressure point, and Iran knows this. Right now, Iran has the Strait of Hormuz closed. So when the Strait of Hormuz is closed, we actually don't have access to about 20% of the global oil supply, because 20% of the global oil supply goes directly through the Strait of Hormuz. So as you can imagine, this causes a surge in prices because there's only about 80% of the other oil that we need, but there's still the same 100% of demand. So let's take a look at what it looks like when oil prices surge and what happens going forward. Well, when oil prices surge, the market reacts very quickly, and they react quickly because there's a fear that inflation is going to go up. And they think this because think about everything that happens from getting goods to one place to another, from how it's created to how you drive and buy it. When it's created, they use oil. When it's shipped, they use oil. And when you buy it, you use gasoline to go buy it, which is also using oil. So what this does is prices tend to increase in the future. So when these prices increase, you now have less dollars to spend on other things, which causes economic growth to slow down, and ultimately, if it lasts long enough, there's potential that there's a recession moving forward. Now, this is a graph of the effect of wars on the oil supply and oil price over the years since the 1970s. If we start all the way back in the Yom Kippur War in 1973, we saw oil prices rise 400%. They went from $3 to $12 a barrel. And we recently saw it in the Russia-Ukraine war, where we hit over $100 a barrel then too, because we were worried about what might happen going forward with Russia's oil supply cut off to the rest of the world. Now, what I want you to keep in mind when we look at all this is oil is just one piece of the puzzle. And there's a lot of short-term volatility that we see in the markets from a day-to-day, week-to-week basis. What I want you to keep in mind is our long-term goal. When investing, we can't be discouraged by short-term volatility, whether that's due to oil prices, who's in the White House, or whatever else you hear on the news. Long-term returns are driven by economic growth and innovation. And to prove that, look at this chart from 1970 to 2025. And despite all of the events that are mapped out on there, we see a trend that's up and to the right. Well, why we see that is because companies are in business to make money. They're not going out there worrying about everything else that you hear on the news that the common everyday person's thinking about. They're worried about how can I drive profits as I go forward, and how can I best position my company to succeed in the future. So over this 55 years, the S&P 500 did over 11% on average. Were there some hiccups? Were there some downfalls? Of course there were. But in the long term, staying invested is what matters. And what we're doing here for you at Retirement Solutions is diversifying portfolios so they're designed to withstand and weather these changing market conditions. I want to leave you with one more thing. Geopolitical events create headlines and short-term volatility. But history shows us markets eventually refocus on earnings, innovation, and economic growth. Keep that in mind as you drown out the noise going into this year. And if you have any questions or would like to discuss anything further, please don't hesitate to reach out. My information is on the screen below, and I'd be happy to talk to you. Have a great day.